What's up, HyperFast Nation? I am on the road for this episode of the show and have an amazing guest who has spent many decades helping people save on their taxes. And for the last 20 years, he's specifically done that through his company, Engineer Tax Services, in the real estate industry. Welcome to the show, Julio Gonzalez. Welcome to the show today, Julio. How are you doing?
I'm great. How you doing?
Good. Excited to have you on. A lot of good topics that we can dive into for real estate investors, how they can save money on taxes, which no one likes paying, and how they can get free equity for projects. So before we dig into some of that stuff, why don't you give our listeners a little bit about your background and bio, and how you got to where you are today?
I started doing real estate tax work in the early 80s, 1980s. And then in 2001 started my company. And so we're a real estate tax firm. We work with several thousand accounting firms nationwide, helping them help their clients with all these different tax incentives, credits, and grants associated with investing in real estate. And so we're grateful to be a resource to all those accounting firms and help these people that generate all this great opportunity in real estate to be a resource to them.
Yeah, there's a lot of things out there. I think the two most common ones that I at least hear about are one, cost segregation, and then two, opportunity zones. And I know those, the last 5 years or so, both of those things have been more used, more talked about. So, are those two the areas that you're providing a lot of guidance around?
Yeah, definitely. No doubt about it. Cost segregation is, the study that allows us to determine what part of the property is non-structural and thus can be depreciated up front. So that's great for reducing taxes, saving that cash, and using that cash to invest in other properties. Obviously, everyone knows that with the opportunity zones, we can forego some of the capital gains associated with investing in opportunity zones. So those are two great strategies that we work with real estate investors through their accounting firms nationwide.
And those have both changed, I think, right? Or some time limits that were associated with them have come up. I think you can still use them both, but maybe the benefit is a little different. Do you want to maybe shed some light on that?
Yeah, on the opportunity zone, the capital gains period is getting smaller and smaller. And on cost segregation, anything that we reclassify used to have 100% bonus depreciation, so you could write it off on the first year. This year, the bonus depreciation goes from 100% to 80%, so you still get a bulk of that write-off in the first year. Next year, it goes to 60%. So it's getting condensed into a little bit of a time factor there, but ultimately still are both great opportunities.
And then does it keep on declining by 20%? Or
Yeah. Yeah, exactly. So like currently the way the tax code is, so on the bonus depreciation, it goes, last year it was 100, this year 80, next year 60, then 40, then 20, and then it goes to 0, which then means that reclassified property will get written off over 5 years. Much better than 27 and a half for residential real estate or 39 years for the commercial properties. But still, that bonus depreciation is supercharging some of those benefits right now.
What do you think will happen to I know a lot of deals were kind of driven by that benefit. So when that goes away in 3 or 4 years completely, what kind of effect do you think that will have on the real estate market?
I think those benefits are great. I would imagine that Congress will probably reinstate it because of the current economy, the slowdown in real estate, the high interest rates. Typically, they use that bonus depreciation when we see those two factors to spur the economy, especially spur real estate. So my guess is that they reinstitute it based on the current economics that we're seeing.
So you think it'll come back? What about opportunity zones?
Yeah, I think they'll do the same thing. I think they'll, reinstate the program, bring back some of the benefits that we had initially when it was put in place in 2017, because obviously, when you have a slowdown in the economy and real estate is impacted by the slowdown, the high interest rates, you have to use monetary tools in Congress to get the real estate going back and being more viable, right? Because it creates so many jobs for us and really is a big part of our GDP as a country.
Who are the typical clients, people, investors that are taking advantage of these two benefits? Like, is it just people with hundreds of millions of dollars to invest, or entry level people, or somewhere in between, or mix of both?
Yeah, it's definitely a mix of both. I've seen that this year, more than ever, it's been the people that are investing in the Airbnbs, right? So it's these small townhomes that they're renting out as Airbnbs. They're buying them as rental properties. They're taking advantage of cost segregation to write off the property to lower their taxes to buy that next property, or they're buying them in opportunity zones to help with the deferral of small, short-term and long-term gains. So I
Yeah,
would
that's
say this year more than ever,
interesting.
we've seen the Airbnbs.
It's interesting you say the Airbnbs, because we actually the last few years did a cost segregation on a few different Airbnbs, and they weren't super expensive ones. So like it,
Yeah.
I think years ago it was kind of cost prohibitive or not enough benefit to even do the analysis on properties that unless they were a certain size, and now it seems like it's getting easier for like almost any rental property to take advantage of this.
Yeah, the IRS has made the rules a little bit easier for the Airbnbs. They don't require the licensed engineering site visits for those properties. They're a little less audit mode for those type of properties, so it has made that easier for the industry, which obviously brings down the cost. And so overall, yeah, that's been a good compromise with the IRS.
And then on the opportunity zone front, I a lot of times the way I've seen kind of your regular everyday investor take advantage of that is actually by being a part of a syndication. So like I've seen a lot of syndicators do opportunity zone deals, and then they kind of pass that benefit along to their limited partners or investors. Because I think for a lot of people, like taking down an entire OZ deal, a little bit more complex than like your typical Airbnb.
Yeah, no doubt. It's nice that you have the syndicators out there, even the crowdfunders, that are allowing people to come in with little money and get involved in big projects and come in as limited partners through the syndication level, through crowdfunding, and through these different partnership programs. So I think you're right. We're seeing more and more people get involved. We're seeing the GPs, the general partners that do these projects, bring in smaller investors that are not necessarily qualified investors, so they go through a little different route to get there. But yeah, it's kind of nice to see the diversification coming into the industry. I think that why we're seeing that is because people don't trust the stock market, and they know that we can go into real estate, we can see it, we can feel it, we can hold it, and we can also get the depreciation through the cost segregation study or through an opportunity zone. And if I buy a stock, it's in the stock market. Who knows what's going to happen? I don't get to write it off. I don't get to do a cost segregation on my stock. I don't get any capital gains deferrals like I do in the opportunity zone. So I think it's great to see that we're having investment vehicles where more people could come in and share those benefits.
Yeah. Let's talk a little bit now about the free equity, or the equity that's available to developers. Like, what
Yeah.
are what are
Well,
what are
listen,
some
I,
ways
I'm
that this
glad you
works?
I'm glad you brought that up because there's so many federal, state, and local grants where the government at each level is giving out free capital in the terms of these grant programs. Now the problem is we have a lot of real estate investors, small, big, medium, that are going in and investing in housing, they're investing in local projects, but they're not taking advantage of the grants. Most people don't even apply for the grants, and the money just sits there, right? You and I have all paid in tax dollars, and those tax dollars, some of them get allocated for grants. Why do they get that? Why do we do that, right? We put grants aside for housing and for real estate because we want to see real estate development in our country. We know it's important. And we know that if we have grants out there, that means that more people will invest in projects, and there will be more housing, there will be more real estate development, and a better economy in our country. And so it's just a matter of taking advantage of these grants. I mean, the grants could be for rehabilitating real estate that has, had, bad situation. Maybe it's because of storm damage. Maybe it's just old and, in a bad position. Or it can be for new housing. It can be for new development where we're going to create jobs, or we're going to create affordable housing. So there's so many opportunities, and the grants just sit there, and I guarantee you they're so valuable. It takes not much time to get in those applications. And the government also, a lot of the states contact us and say, look, we have land. We would like to turn this land into something that generates taxes for our community. Can you find us a developer? If we give them the land and we give them some grants and we give them some free or help them with financing, will they come in and develop a project that ultimately will start creating tax revenue and creating some housing or some economic activity in their communities? So look, I think it's important to look at the grants at any type of property you're investing in.
I appreciate you getting on here, sharing your wisdom and value, and hopefully some insights that will help people pay less taxes and develop more property. And always appreciate to have someone like you on. So thank you again, and to all of our listeners and viewers out there, thank you for tuning in to this episode of the HyperFast Show. We will see you next time. Thank you for tuning in to this episode of the HyperFast Show. Look, we learned a lot about saving money on taxes, which, as a real estate agent is quite important. A lot of real estate agents are bad at paying too much taxes. There's a lot of things out there that, like Julio was talking about today, that can help you pay less taxes. And guess what? Other than taxes, the biggest expense for most real estate agents is what they pay their brokerage. A lot of real estate agents have, might have been there for years and think they're paying one thing, and you look at all the splits, the fees, different transaction charges, and they end up paying like hundreds of thousands of dollars a year in some cases. I mean, which you compound that over a real estate career, and now all of a sudden you've given millions of dollars away to your real estate brokerage. It's completely unnecessary, right? They're not typically generating leads for you or really helping you grow your business. So if you are a real estate agent looking to keep more of your commission, build multiple streams of income, multiple ways to get to wealth, and scale your business, I would be honored to talk to you about eXp Realty. All you need to do is send me a text message to my phone at 703-638-4393. Again, that's 703-638-4393. Send me a text message. Tell me you're interested in learning more about what myself and Carrie Scholl can do for you at eXp. I would be honored to have that conversation with you. We've helped hundreds of real estate agents in the last, 8-9 months at eXp. We've helped a few hundred agents already make the move, either through us or people that we have sponsored, and they're saving tens of thousands of dollars, sometimes hundreds of thousands of dollars a year. Building multiple streams of income, scaling their business. So if you want access to all of that, please send me a text message. You owe it to yourself to at least have the conversation about what we can do for you on the eXp platform. Again, that's 703-638-4393. Send me a text message. Thanks again for tuning in to this episode of the show. I'll see you next time.